You're listening to the Practical Wealth Show with Curtis May.
All right. Hey, guys. Welcome to another episode of the Practical Wealth Show. So I'm excited. I have my main man, Dan Zitofsky, back. Dan was on, if you've been listening to the show, he was episode 3 and 4. Because so we've been talking before I started recording. I said, we got to start recording because we'll catch up and we could talk literally we went to lunch one time and was there like almost 3 hours. So the first time we met, right?
Like 5 minutes.
Right. And but let me tell you a little about Dan for those of you who are new to the show. Dan is president, CEO, founder of Zitofsky Capital Management. And for well over 2 decades, he specialized in working with clients to build equity in their wealth portfolios through investment, savings, IRAs, really probably self-directed IRAs, 401ks. And what he does, great due diligence, and just personally, just so you know who you're talking to, he's closed over 800 fix and flips. He's got, you have more than that now, 650 doors, rental properties, 800 plus doors, right? Multifamily projects. And he does thousands of private money and non-performing note transactions, really huge. He's like the man in the note space. And so he personally coaches investors at all levels. He offers guidance. He's done this for some of my clients already, right? So we are kind of partnering together for turnkey rentals, fix and flip properties. Most importantly, creating true passive wealth, which is what we want to speak to today. And he teaches people how through private lending, how to become the bank, or really is an interesting strategy on just, he calls them partials, and being the bank with their own properties. I don't know if we'll get into that. You're going to call him for that one. I'm just giving you a hint. So the book is Passive to Prosperous. And that's kind of where I want to start. Because I remember when you were writing the book, you were, Dan talks all over the country, really all over the world, right? And he said, well, I kind of want to, shift because everybody wants the nuts and bolts. But the most important part, and this is where we want to start, is why are you doing this? What do you want? And so when he works with clients, he starts with that. So why is the why important? Well, first of all, Dan, tell him what I didn't tell him. Then tell him why the why is important to you.
Well, I think you did a really good job. Summation of who I am, where I've gone. I've done everything. Like I said, I've been through the mix in the real estate investing world and the lending world, from wholesaling to fixing, flipping. I've owned multifamilies, land deals, hotels. And now I specialize in creating passive income and wealth for myself, and then also for, investors and students I work with, because it backs out to my vision, everything. And I appreciate you bringing up the book, because my why is everything. I don't care how you do things. It's my why. And for me, my vision is totally different. Who I am is totally different than who I was about 11, 12 years ago. Who I am now is I'm a father, I'm a husband, I am a coach, I'm a friend, I'm a son, I'm a brother, I'm an uncle. And not one thing in there in the beginning, the first 5 or 6 things I mentioned says I'm a real estate investor. Right. Because, I'm not, it sounds crazy, and I hate to say it sometimes because people look at me a little weird. I'm so not money motivated at this point. Mm-hmm. I don't chase money anymore. I enjoy making money, but I chase what's in my vision. And if something's going to jump into my vision that's only based around money, I'm not going to do that. So, besides being all those things I mentioned, I love being a mentor. I love being a coach, both in sports and in life. So I do life coaching. I do mentorships, group mentorships, teaching vision, mindset, roadblocks, sales training, that kind of stuff. I still have some students that I work with on raising private money and building passive income, but with rental properties. I educate them and mentor them on that. It's not something I do a ton now. I'm very selective on who I work with, because if somebody's vision doesn't align with mine, if they're in this just for the money, right, we won't align, and it's not something I want to do. So I've given up a lot of that money because we don't align together. So I hope that resonates with the group, that my vision is based on doing what I want, when I want, with whom I want, anytime I want. That's really what it's about. And it wasn't like that for me in the past. Right. I learned a hard lesson, because I probably came from where a lot of people come from. And I was in real estate because I wanted to be successful. I wanted to make money. All right. Money was allowing me to buy my cars, boats, watches, and I still have a lot of the stuff because I have them already. but I've learned a lesson that I don't go and chase those things anymore. I chase memories with my family. I chase time with my family. And I don't let anything get in the way, no matter how much money I can make, unless I believe in it. If I believe in it, I'm 100% in. If I don't believe in it, I don't care how much money I can make. I'm not in, because I'm laser focused on my vision and my why. So that's why I had to put the book out there, and that's why we've been asked to speak now internationally, and all over the United States for sure, multiple times. And before the coronavirus, we got to speak a lot, and I love it. I actually feed off that stuff because I'm changing lives. Every time I do a 1 hour talk, or even less, there's people in the audience crying. Right. If my wife happens to be there, I start crying if I look at her. So it's really heartfelt and emotional, and I'm very vulnerable, and I'm very honest when I speak to people. And that's what makes a difference in their lives, because I'm just looking to resonate with somebody, right, and help them change their lives. It doesn't have to even be somebody wanting to invest in real estate. It could be someone like yourself doing life insurance, right, working a tremendous amount of hours chasing money and not living your life. It could be a real estate broker. It could be a contractor. It could be I work with a lot of dentists. I mentor a lot of dentists. They work a ridiculous amount of hours, and they're chasing money, and they're hurting because the insurance company's not paying. So it's a very high stress position. So I want them to understand their why. Why did they get into dentistry? Most of them didn't plan to get into dentistry to work 100 hours a week and deal with insurance companies, so on and so forth. So I know it's a long, drawn out answer, but I'm so passionate about that. Right. And I honor you, and I appreciate you bringing me on to share this with your audience, because if I could change lives out there and people just look at their lives, they don't even have to be real estate investors. Whatever they're doing, figure out why you're doing it. Okay. And that's so important. Once you figure that out, then it gets a little bit easier, but you really have to dig deep and figure out why you're doing what you're doing.
You begin with the end in mind, but I was saying, if the why is big enough, the how won't matter. I mean, you know, and you gotta have big enough goals that kind of pull you out of bed in the morning. You know what I mean? That is pulling you towards where you want to go, because you're just, it's burning in your gut that I'm supposed to be here. I'm supposed to do something special. And if you don't feel that, then you don't, because real estate is just a vehicle.
Oh, yeah.
And building a business. I was listening to Dan Kennedy. I saw something. He said that a business, the goal of let's say if you're never an entrepreneur, if you're listening to this, you should at least want to be an entrepreneurial thinker. And the goal of building a business is the freedom. Is my goal. My driving force is freedom to live life on my terms, without having to answer to anybody. And that doesn't mean you're like a billionaire. It just means that if you have passive income greater than your expenses, you're financially independent. And I think, would you say that could be done? That's kind of my goal for people, is doing that in a decade or less, 10 years or less, is building economic independence. Is that I don't think that's realistic if you are focusing on what I call the accumulation theory, right? Which is, buy and hold and dollar cost averaging and, all that stuff that you hear from typical advisors. But I think if you're doing what Dan is talking about, focusing on building assets, what is an asset? Something that puts money in your pocket every month. Talk about that. Once they got their why, now it takes money to live the way you want to live. And now you help them move into, I don't know if there's your next step, but you know what I mean? What should they be thinking about? We figured out why we want to do, then you got to figure out the how. The how. That's it. Why, how. Mm-hmm.
So once they figure out the why, then we look at the how, and it's very important to say, okay, how many years? And you mentioned 10 years. 10 years is very doable. And a lot of people do, and I'm sure you deal with this too, Curtis, a lot of people do not realize how much money they actually need to live the lifestyle they want to live that comfortable lifestyle. When I ask people, and I know this because I ask people, and right away I get an answer, if I need $20,000 a month, or I need $10,000 a month, but they don't know why they need $10,000 a month. They don't know why they need $20,000.
It's a number, right? They pick that.
And I asked them, I said, would we really need $20,000 a month to live the life you're talking about right now, the why you're telling me, the vision you're telling me, right? To spend time with your family, not chasing. You really need $20,000 a month. And when we sit down, and that's why I said people need to really put some time. And I know you're great at working with people with this, figuring out their budget, figuring out their long-term plan for their life, figuring out what you really need to live in that 10 years or in that 5 years, or when you want your spouse, or you want to retire, or you want to pay for your kids' college. What do you really need? How much do you need? Then you work, because this has to be planned out. Then you work backwards, okay?
Yeah.
What are you working with right now? How much do you have in funds? How much do you have how's your credit? How is your income? Where are you at today? Okay. So let's say you have 10 years. You only want to make $10,000 a month. Well, if you buy 10 to 15 properties and have those paid off in 10 years, you will have that money every month. Now, there's no guarantees. Obviously, things can happen. But here's the bottom line. With real estate, you own the asset. So how much money do you need to buy 10 to 15 properties? Well, maybe you need $250,000 to $300,000. Do you need that today? No. How much do you need today? Maybe you need $20,000 today. Buy one property. Buy one property every year. Buy one property every 6 months. It's different for everybody. People always ask me, how do I get to as many properties? Because we own over 600 assets right now. How do I get to over 600? I tell them one at a time.
Right.
It's a snowball effect. It's like compound interest. It's a snowball effect. You get one. One turns into two turns into four turns into 8. And when I say 10 to 15 properties, I have some investors right now that are buying no less than 20 a year.
Wow.
10 in their name, 10 in their wife's names, because you can get mortgages on those if you have good credit, good income. With Fannie Freddie, up to 10, it gets a little harder after the 4th. You have to have good credit and good income. If you don't have good credit, it's okay. You work with somebody to fix your credit. So there's always options, right? If you don't have the money now, it's okay. You show them, Curtis, that's what you're great at. You're showing them how to get money put away to get your first property.
Right.
Okay. Get the first one. Right. And then if it takes you another year to get a second one, okay. Second one, you have a year. Now you have 2 properties with some equity in them. Now maybe you could start using that equity to start buying some more. Okay. Right. So there's a plan. There's always a plan, but you got people, how do you eat an elephant? One bite at a time.
One bite at a time. Mm-hmm.
I ran a campaign last year, a political campaign almost 2 years ago, and I had to knock on $10,000 doors. And they're like, how in the world are you going to knock on $10,000 doors? So my answer was one door at a time. And we did it. We did it in 13 months. We knocked on every door. So once again, don't look at the big, look at the big picture and then break it down in a funnel.
Right.
And it simplifies it. And that's why people need like someone like yourself, a wealth advisor in their life, a true wealth advisor. They need someone like us that really works with you. And when you called us up with your clients, you're saying, Dan, I have this client. This is how much money they have. This is their plan. I'm working with them for this. We work within those plans. We don't tell the client to go out and buy 20 properties.
Right.
If you're like, well, they have a certain amount of money. This is their plan. This is how many years they want to work. We work in that plan. That's why it's a team environment. And I love working in a team environment, because when I get to work with you, Curtis, with your clients and partner with you and your clients, it's great because you sometimes understand more about them than they understand about themselves, right? Because they're coming to you as like this little child, like a parent, and they just want to play, and you're like, all right, little child. And I don't mean to say it like that to anybody, but all right, I'm going to show you. I'm going to teach you the way, because I've done this so many times, and I've taken people so many times. For you, it's your first time. For me, it might be my 1,000th time working with somebody.
Right. Because business is a team sport.
Oh my God! Yes.
And we have literally, with the client's permission, I've helped them put together their financials, and because really, when we talk to people about we talk about investing. I only focus on investors that generate cash flow, and then there's asset classes. So there's 4 asset classes: business, real estate, paper, and commodities, right? Mm-hmm. And so if you're diversified, you're really in all 4. Diversified doesn't mean you have 10 different mutual funds or 100 different mutual funds. Right. 100 different stocks in a mutual fund. You're just shuffling what I call deck chairs on the Titanic. I should say. And but now because if you with this Corona stuff, so you said something before we started. So now with what's going on, people are realizing your strategy was right. Elaborate on that.
Oh, well, I've been speaking, obviously I'm doing this 29 years, but since about 2008 or 9 is where I really started. I had my shift to really build a passive income over transactional. So that's the difference, right? It was very transactional. I was making $50,000 to $80,000 per property when I fixed and flipped it. So everyone knows fix and flippers, HDTV, and all that stuff. And I was doing anywhere from 30 plus, sometimes as many as 60 properties a year. So figure it out. I was making multiple 7 figures a year. Okay, that was very transactional business. If I didn't work the next month, I didn't make anything. All right. So then I switched back then to real passive income. And I always told people, I said, making, let's say $50,000 to $80,000 per property, let's just say 50,000 is pretty cool compared to only $200 or $300 a month, right? It's a lot more sexy.
Right.
But when you make $200 or $300 a month and you do it 600 plus times, it gets really damn sexy. And during a time like this, during a coronavirus, okay, yes, you have, and I get people, well, my tenants can't pay rent. It also depends where your houses are,
right?
What tenants you have in there, what kind of jobs they have, all right? You got to plan accordingly for that. But when you have a decent amount of properties, and let's say 10%, let's say you have 10 properties, and 20% of them can't pay rent. So two out of 10 cannot pay rent. You're going to be okay because you have reserves, right? You're getting $200 or $300 a month on the other 8 properties. That's $2,400. You have money to cover the other 2 for 3 or 4 months, right? So passive income, and I don't say take the $200 or $300 in your pocket and spend it every month.
Right.
That's exactly what you say, Curtis. Get a reserve account. Have 6 months to a year in reserves. That's the difference between what we show people. Is passive income still pays us. Yes, we have to work with some of our tenants, but you're never going to have a situation where every tenant doesn't pay you. It's just not going to happen, right? So we had, before the first of the month, we had 70% of our tenants, before the 1st of April, during this coronavirus, over 70% of our tenants had paid us, okay? We are now before the 5th of the month, we're at 92% paid us.
Okay.
As of the 11th, as I think was Friday, every one of them paid us. So yes, so we waive late fees. We were able to do that for them, okay? We couldn't, you can't evict now anyway. You don't want to evict your tenants. You want to be empathetical to them. You want to help them. You want to work with them. But we have the ability to do that because right now, if you're out there fixing, flipping, you don't have the ability to do that. Inspectors aren't out there right now. There's delays with banks. So we took control of our own business and our own life and built this portfolio. So even people with these accounts right now can just call up and say, hey, Curtis, I need a loan for my account. And they have money in their account because they built up a network. And it's so important to build up that network and stop trying to be like the Joneses next door and buy the beautiful cars and boats and watches. I was guilty. I'm humble enough, and I'm going to be completely honest with you. I was guilty of doing that because all I was doing was building my ego. That's all I was doing. It's all in the book. I talk about that, why I did that, the life I had growing up. I thought that was success. I learned a huge lesson. And I just want to share that with so many people so they can try to avoid that, especially the younger people, before they get into what I did, right? When I didn't do anything illegal, I just spent. I was blowing up my ego. I thought I was God. I was out there. I did it. I thought I was God. I was showing off.
Because you can make money. And so if you feel, because what people don't, especially if you're blessed with the ability to make a lot of money, what a lot of people don't realize is income is not wealth, and income can stop and you can consume it. Your desires for stuff can always, I don't care if you make $1 million a month, you can figure out how to spend twice that, because there's no, it's always stuff you can buy. That's what somebody's willing to sell you.
I'm really glad. No, it's funny because you got to go out. We got to get together with the wives, and my wife, she'll be like, is there anything you could ever do without having it pay you back? Like everything I look at is how do I make this pay me back something, right? How do I earn income from this, right? How do I buy something that's going to pay me over and over? Or how do I get involved in anything that's going to pay me residual over and over and over again? That's what I love. Or can we go on a trip one time without it being, you're going to speak at this event and then we're going to go spend 3 days so you can get a tax deduction? I think like this. I never used to think like this. I don't know.
It's so funny. I've been telling people that. It's like, listen, you should, like, one of the things I teach people is that, listen, you need some side hustle, I like affiliate or network marketing because it gives you the ability to do what you just said, be able to, because there's 2 tax codes, right? One for wage earners, one for business people. And I was having dinner one time in, where was I at? Park City, Utah with Tom Wheelwright, right? Who's Kiyosaki's CPA. And so Tom says the tax code is a map, right? Then he calls it a treasure map where the government, what do they want you to do? They want you to provide jobs, provide safe, clean, affordable housing, is what you're doing with Turnkey. They want you to provide real housing, right? But your product is safe, clean, affordable housing. And so you're doing what Dan and I are talking about with the turnkeys. That is your product. And then it's to provide energy and food. So if you can learn to organize your affairs to do that, and you're, and if you read cash flow quadrants in the B and the I quadrant, you will substantially lower your taxes because it's all about entrepreneurs or would-be entrepreneurs keeping more of what you make and then taking that money. Like, it's funny. I'll tell people and I'll say, well, what's the first, somebody told me, I just read Rich Dad Poor Dad. I said, what's the first lesson? Pay yourself first. I said, no, it's rich people don't work for money. Right. And so they work to convert earned income into passive income. They don't take, last time I checked in, they take FICA for you to Medicare out of your rent checks. No.
That is correct.
You right. You get 100% of your money. You get to take your deductions. You get the all that stuff. And depreciation.
And that's what kills me about the schools, right? I was interviewed yesterday on somebody's podcast, and I just talked about it. I said, this is a great opportunity to actually be able to teach your kids yourself, right? I know nobody wants to be, everyone realizes how great the teachers are, and they're phenomenal. And teachers, now everyone's going to want teachers to get a raise because they realize how their little Johnny or Susie is not the best kid in the world. They're not the most motivated. They don't do that. Right. They're responsible for them. But you could take this time and you could teach your kids what you want to teach them right now on economics, entrepreneurship, life skills, the skills that they're not learning in school. Maybe you're too busy when they come home, you can't teach it. But I mean, I've been playing games with my kids. We've played Monopoly. I haven't played cash flow with them yet, because I don't have the game here, but it's at my beach. It's at the beach house. But I want to play cash flow with them. But we talk all the time about entrepreneurship. I'm involved in, I don't do a lot of multi-level marketing. I don't even do multi-level marketing. I'm involved in a social media platform that I get ad revenue for. So I'm teaching the kids that. I have my son helping me start a business within my business to generate leads for investors. So I'm putting them to work. So they're learning everything they need to learn for life. So take this time with your kids right now and teach them about this. It's so, I mean, my oldest daughter is reading Rich Dad, Poor Dad. A friend of mine, someone I've mentored, she gave my daughter an assignment because sometimes it's hard to work with your kids, right? So she said, first assignment is read Rich Dad, Poor Dad. So she's reading Rich Dad, Poor Dad now. And it's great that's coming from someone else. So you could do so much with this time to teach them. But that's great that you said that, because it's during this time you could really take your business to the next level. You could prepare. Yes,
but while people are binge watching the Ozarks or whatever, you could be. That's why I've been messaging and telling people. So listen, you should be. I'm working on my marketing. Right. I'm taking courses. I'm doing stuff with the show. I probably recruit 4 interviews this week. And I've always worked virtually. And so now I've kind of added business where I'm teaching other advisors how to kind of do what I do. And so I've started in the last 2 weeks, a couple of different business and recording some coaching programs. So it's like, listen, so when we come out of this, while you've been sucking your thumb, Curtis is taking up market share. And so, because you, on the other side of, what's that saying? On the other side of crisis is opportunity.
Exactly. 100%. And
that's why I love talking to you.
and that's what I've been doing. So I've been spending I've worked harder these last 3 weeks than I think any 3-week period in the last 10 years.
Wow.
What else are we going to do? I mean, you go for your daily walks around the neighborhood to get some exercise. You spend time with the family, having dinner, playing games, but they have schoolwork too. They have work. But during that time when you're working, I'm laser focused on fixing my business, right? Fixing my professional and my personal business affairs. Going through, you should do the same thing on your budget. Go through your personal business and look at what you're spending money on. That's a waste, because every dollar saved today you'll be able to 10x those dollars in the next 3 to 6 months. Because there's a huge influx of opportunities coming. There's going to be a huge transfer of wealth coming. And this is 2009 all over again right now. That's what I teach people. And that's why when I teach people how to raise private money, it's so important, because if you learn how to raise money right now and you plan your portfolio, if you buy assets right now, you're going to come out of this and you're just going to shoot through. And people are going to, in 2012, they used to say, I wish it was 2009 again, and I jumped in 2009. This is 2009 all over again. Right. You don't want to be sitting on the sidelines in 2023 saying, I wish it was 2020 again. You need to jump in today. And it's important. There's if you reach out to people right now, there is a big influx. I am busy with private lenders right now that are scared to put their money somewhere else. I'm not telling them to sell the stock. I don't want them to sell low. I don't use scarcity tactics.
Right.
I believe in that. I respect people, and I feel bad if they lost money. And I don't say, well, your 401k is a 101k. I don't do that. But the people I work with have IRA money, 401k money, Coverdell, health savings accounts. Like, these are people that aren't out there trading stocks. They don't know what they're doing. So maybe if you're a trader, you know what you're doing, and you're a high risk taker, which I'm not.
Right.
You play the options and puts and calls. I don't understand this. I don't want to understand it. It's not my niche.
Right.
But if you plan accordingly, right? And that's why working together with you is awesome, because we're a team. We plan accordingly. Okay. We look at people, 6 months out, 1 year out, 3 years out, 1 month out, a week out. Where are they at today? Where do we need to get to? And that's why I absolutely love working with you and your clients, because basically you do a phenomenal job with them. I don't know how else to say it is. And I'm not saying it to pat you on the back, but really they come to me, and I have a client that might not ever have invested in one rental property. And they come to me with more knowledge than someone who thinks they know it all that's invested in 20 or 30 because they've done it wrong. So I appreciate that about what you do, and it's a pleasure working with you.
Oh, thank you. I always try to get around bigger brains than me. And, one of the things that is, investing is not risky. As Kiyosaki says, being uneducated is risky, right?
Oh, yeah.
And so you've got to, have your financials in order. And then, like what I try to do is make sure they're in order. And then it's like, okay, now what do you like? I want to introduce you to Dan, and so it's, and then because it's a process. Somebody asked me the other day, well, listen, is this a one shot? We'll help them start their banking, using insurance. And they'll go, well, I see you again. Is this a one shot deal? I says, no, dude, you're stuck with me. Okay. Because this is the beginning, not the end, because, we want to get you. So if you were listening to this and your goal is to, I don't want to, and that's what we're in with, Jan, because I know we got to talk to you all day long. You got other interviews to do. So prep for this is a little bit about raising private capital, because people say, well, I don't have any money, but you got to give yourself a process. You should be in a hurry and focused, but you need to not skip steps. So, in our 5 principles of personal finance, we teach you how not to skip steps so that you're building a strong foundation. But you do need to, because see, the first thing, so if you read Dan books, or let's say you decide you want to engage with him through coaching or the courses, what do we always say? I'll probably run this in the hole, but your number one asset is you, right? And so you have to invest on purpose. So I've seen this triple my revenue in my business. I invested in Curtis, right? My mindset, my skill set, and my network, right? And you cultivate your network. And then your number one investment, I believe, is or your business. Not in sending some fund manager 1,000 miles away you never met. So you can't get good at anything that you don't spend time with learning the ins and outs of it is. And I'm sorry, because if you, the closest thing to that is probably the turnkey, but it's still, I like the word leveraged income, because it's leverage, but it's not completely passive, but it's as passive as Dan will get as passive as ever going to get, right? Yeah. And you hear this, and so what you don't miss is that this is a person who's just said he's already financially independent. All of his properties have paid, and he's worked harder in the last 3 weeks than he's had in the last 10 years. And some of y'all are binge watching Netflix.
Unbelievable.
So I just want to smack some people around with that. So hopefully you're going to sell it. Okay.
In 2009, I almost lost everything because I based my business around banks and hard money lenders. Mm-hmm. And once again, I had no control of what was going to happen. And I swore to my wife at that point and said, I will never let this happen again. I'm going to bust my butt. But I came out of it a little late in the game when I said I'm going to bust my butt. And I had to work harder, and I did it. I've raised over $30 million in new money and used it in $200 million of velocity. But this is 2009 all over again. Right. Mm-hmm. So I'm still out there, and I'm like, wow, now I'm at the beginning of it. And I get a little weird because I'm not here to take advantage of a pandemic that's going on, but I'm also not going to sit around and watch Netflix and be miserable and watch the news and all the negativity on social media. I literally don't look. I don't even know what's going on. I don't know how many people have coronavirus. I don't know how many deaths there are. I don't watch the politicians talking about it because I can't control that. I only take action on what I can control. Yep. And what I can control is my business. What I control is social media. I'm doing a lot of social media right now. I'm building my audience. I'm bringing in more investors. I'm speaking to asset managers, finding more properties. I'm speaking to more investors that have reached out to me that said, well, now I'm really ready, because I learned from you speaking the last however many years about creating passive income.
Yep.
Now I understand why I need it. Sometimes you just need to smack them in the face with a little bit of experience to understand why you need what we talk about. Same thing with you. How many times do you talk to people forever? And I don't sell people. I don't believe in it. Right. I present opportunities. And if you want to take advantage, I'm here to help you. If you're not, I'm not here to sell. I used to try to sell people that didn't want to be sold. And I don't like doing that. It's not me.
That's like,
I like
beating your head against the wall. Yeah.
I just like working with people that I feel good about helping them. Right. And I'm very honest with them. I don't sell them. I don't sugarcoat anything. I'm honest with them. I make sure they understand what they're getting involved in. I make sure it's the right fit for them. If it's not the right fit, I tell them it's not the right fit for you. So that's where we're at.
That's where we're at. So let's finish with this. So what is, you don't have to go into great detail, but I want them that this is a conversation, because they have to get prepared for this and reposition stuff, but, and actually kind of show a track record. But what is raising private capital? Because one of the things I want you to hear is he said, I wanted to take control. See, one of the key things you'll find with successful people is they want control. They don't give up control of the investment. Okay. So I want you to hear key points that we said. You got to see, wealthy people think differently. You got to hear the words. Okay. And I want y'all to catch some of these words. I don't want just to go by you because we're having a conversation. But what is raising private? Because you talk about that a lot in the book.
Well, raising private capital is working with investors that have money in a life insurance policy, right?
Right.
Self-directed IRAs, solo 401ks, health savings accounts, covered accounts for their kids. That their money's sitting there and they can self-direct it anywhere they want they can buy real estate with it. They can lend it to you as a bank. They can become the banker, right? You pay them interest. So think about it. For instance, some of my private lenders, they'll lend us money out 6, 7, sometimes 8%.
Right.
And now on the infinite banking side, for instance, give me what is the interest rate they have to pay, 4 or 5?
5.
Okay.
So it's 2,000 because they're earning 4, let's say, but when they borrow the insurance company's money, they get it for 5. So really the net cost of borrowing is like 1%.
Okay, so let's talk about that real quick, because I just want to use some real numbers. So the net cost is 1%. They're lending it out to me, investing in my deal, making 6, 7, sometimes as high as 8%. They're becoming the bank. They're making arbitrage. So they're taking money from one pocket and putting it into another. And then how I protect them is I give them a promissory note on whatever I'm borrowing the money against. Okay. So I help them earn passive income. That passive income now puts money in their pocket, increases their life insurance policy, right? Because they're now making 6, 7%, and their net is only 1%. Right. So they're making a spread on that. So that life insurance policy is growing through the roof. So they're learning how to use their money like little soldiers to go out there and make them more money. That's how I look at my money. If I can send $1 out and it can bring me back 3, I'm going to send as many dollars as I could. So that's private. Private is your investors that a lot of them might be high net worth investors, but they don't necessarily have to be high net worth. But they're not. It's their money. They're not borrowing money from Wall Street institutions. They're not with banks. They're not a bank. They're not non-qualified banks where the reason banks shut down right now and stop funding deals, hard money, is because they take those loans and they sell them off to Wall Street. And Wall Street said, whoa, coronavirus, hold on. We don't know what we're going to do. Let's hold on. Right. And you had Chase that said, whoa, unless you have a 700 credit score and now you have 20% down, whoa, we're not going to fund your deals anymore. So once again, hard money lenders and banks control your deals. Right. Now, banks that get involved in rental properties, they're still lending. There's a decent amount of them still lending. So they understand how powerful it is to have good rental properties. They want to be in the game. They want their money out there because just like you, they're getting money in those accounts, right? They're paying out 0.1% of interest in a savings account, if that, and then they're lending it out to you at 4 and 5%. So they're doing the same thing that you're doing.
That's right.
You're becoming a bank. So we teach private lenders how to actually become a bank. And then, what you do is even better because the net cost to them is like 1%, and they're making 5, 6, 7, 8%, up to 8%. Yeah. Some of them, if they become active investors, like they really start going out there and doing deals themselves, they can get double-digit returns. But most of our investors are professionals, business owners, doctors, high net worth people, they don't want to go out there and start messing with real estate deal. They don't want to do it themselves. Right. They want to come to us and say, listen, we want a property that's already fixed up. It's a great emerging market. There's good job growth. We don't have to worry about one industry failing. There's a ton of job growth. There's a ton of infrastructure. Okay. There's great property managers in place. The properties are maintained nicely, so I don't have to worry about get nickeled and dimed every month, and just make my passive income. And every once in a while, yes, something might break. Every couple of years, the tenant might move out and you put a new tenant in. But when they're making that money, not only are they making cash, but they love the depreciation. Yep. They love the debt reduction. Yep. They love the tax write-off on the interest. Yep. They love the possible, I don't say 100%, they love the possible appreciation. Nothing's guaranteed, but in history, I think it's been 6.3% average a year real estate appreciates. So in history, it appreciates. Year to year, it might not, but in history, averages 6.3% a year. Okay, they get debt reduction on every payment. A tenant is paying off your mortgage for you, and what you're doing is you're just the bank. So right. We teach that to private lenders how to use their money and take control of their money, rather than, like you said, give it to some financial advisor 1,000 miles away that really is not going to be a fiduciary of your money. They're right. Most of the time going to invest your money in a deal that pays them the most commission. So my dad used to tell me, listen, nobody will watch your money like you. Nobody will watch your business like you. Of course. And I think I just don't believe you can get where you want to, especially not in 10 years or less, just giving responsibility for there's some magic product, or somehow you're going to give money to somebody, they're going to return this. First of all, I disagree with the whole idea of retirement, but that you can get this big pile of money and then live off it for 30 years. You have to learn how to get passive income today. And so here's the thing. So because what happens is, if you're in business, you're a doctor, you're a professional, you don't have time for this. You're driving for dollars and that kind of stuff, but you need to focus on, this is me. I don't have that kind of time, right? And I don't like it that much, but I like the benefits of it. But I have a unique ability in doing what I do, like my business. Right. I can make money. And so now I need to save money. And now I've got Dan, who's over here in his unique ability, doing what he loves to do. Dan, here's 20, or I got 60. Let me get 3 houses. Let me know when you're ready. Boom, here's the down payment. Let's get the mortgage. I get my passive income. We save part of that. I'm still generating money in my unique ability. Let's go get 3 more. I mean, is it really that simple? It's really if you set it up that way, if you want it to be. And I always tell people, like anything I do, like the social media company I'm working with now, they're like, how do you build up an account? So I said, listen, I keep it simple. I have 3 steps. Follow the 3 steps. Don't muddy the waters. Right. You simplify, and you do every business I work with and I mentor. When I go in, I consult with them. The 3, I talk about 4 things. One is, what is your culture here? Right. Mm-hmm. And that's your foundation. Then the 3 things I talk about is your people, your processes, and your systems. Mm-hmm. If you can work on your people, processes, and systems, and you systematize everything you do in life, and your personal life should be the same way. Systematize it, right? Go through your books, look at your budget, look at your investments, look at your plan, have a plan. Don't just go out there and just willy-nilly it and say, hey, I want to retire when I'm 65, but I have no plan. Figure it out. So have people, processes, and systems. And if you do that, you're going to come out successful, or you could adjust accordingly, right? You might not always hit it, but you adjust. Okay, this happened this year. We have to adjust this. Maybe we don't go out to eat as much because we spent more money than we expected on, automobile expenses. Or maybe we buy a new car with a loan and pay our bank back rather than pay, Ford Motor Credit Company or whoever it is, because that's going to leverage us this much more money. We're net at 1% and we're paying this auto dealership 4%. Why not just pay ourselves? So you have to adjust. You have to, as you give your car an oil change every 3,000, 5,000 miles, whatever it is, you need to give your personal and your business life an oil change as well. And that's the systems and the processes. So if you do that, you're going to come out ahead. You might not always be on this trajectory. You might be a little bit down. Then there's years you're going to be up. But you're always on that trajectory. I love it. Yeah, I was reading, Dan Kennedy says that, all wealth is a product of systems. You don't just wing it. You don't end up at the top of Mount Everest. And so,
I want you to hear it from different people that I'm bringing to y'all guys, that boom, there's a process. How may be different. Somebody may do lease options. Somebody may do land flipping. It doesn't matter. It starts with the why, and then what's your process, and getting good at something and doing it over and over again. That's what I want you to leave with. Dan, how can they find out more about you or get in contact with you? Make sure you let them know you heard it on the Practical Wealth Show. But and we'll put a link in the show notes to his site, to the book, and all that kind of stuff. But any things you got going on you want to share with them, or closing words of wisdom?
Well, closing words of wisdom is really sit down now with your family, figure out your vision and your why, write it down, and come up with a plan and work hard over the next 3 to 6 months, because 2020 is going to be a phenomenal third and fourth quarter. But you got to figure out what your why is and why you're doing this. I will share with you my links, and you can put in the show notes that I can follow all my free pages. I'm putting a lot more stuff on YouTube right now. Mm-hmm. So my YouTube is Zitofsky Capital Management, but I'll share that with you. Unfortunately, my Facebook, I'm capped at like 5,000 friends. So personally, I can't accept more people. So I have the group page, but I'm also on another social media site. I'll give you the link for that. Okay. Because that's where I'm going to be putting a lot of my content and sharing it through Facebook and LinkedIn. So I'll give you the link for that. They can follow me there. I'm going to start moving everything there. That's huge for me. Not only do I share it there, but I'm going to get ad revenue, sharing the ad revenue, because I'm on the beta side of it.
There you go.
I like sharing all the free stuff. They can get in touch with me there. They can contact me there. But I'll share all the links with you. I'll hit you with the links here afterwards, and you can put them in your show notes so people can get all the free information they want.
All right. Listen, guys, but you got to probably listen to the show more than once and get a notepad out. But I want to thank you, Mr. Dan, Superman, Dan the Man, for being on the Practical Wealth Show and sharing your time with me and educating our listeners. Guys, go out there and be active. Even if you listen to this after Corona, be active. The key is take control of your life, have a vision for yourself, and go to work. Thanks for listening to the Practical Wealth Show, and we're out. We'll see you next week.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must